So welcome back friends to Kai by Way, where investing is decoded, simplified and maybe even fun. So in just 10 minutes we'll turn confusion into clarity. So let's get started. So friends, in our previous module we saw the relationship between fundamental and technical analysis, right? So at the end we also saw that today's module is going to be about candlesticks, right? So before we proceed with what a candlestick is, let's just quickly look at what a candlestick chart is, right? Excellent. So candlestick charts are like a storybook, right, for the stock market. So they show you what happened to a stock's price during a specific period, like a day or an hour or even 15 minutes, or it could be a week or even a month. So it'll give you a story, a gist, okay? And it'll also help a trader predict what might happen next, right? So this is what a typical candlestick chart looks like. You might have seen this on people who trade in stock markets or commodities or gold or other digital instruments, right? So this is like a storybook. Okay, what it means is it'll tell you what happened. The price went up, went up, went up. It hit a lack of demand zone, and then the supply started in, which means the sellers started kicking in, and then the price started going down. So it's telling your story, right? So this is how a typical candlestick chart looks like, right? So once we get the candlestick chart, it is very, very important that we club this with our fundamentals that we spoke about yesterday. All right, so it'll give us a very good picture. Okay, so candlestick charts are your guide to understanding market moods. They help you see if buyers or sellers are in charge and what might happen next. Okay, but for this to be more efficient, you need to pair them with other tools for a winning strategy. So what are those other tools? Don't worry, we are going to explore in our future sessions. Okay, so come, let's see what's next. It's time to look at what a candlestick looks like. Okay, brilliant. So each candlestick represents four key price points, right? And a particular time frame. I mean, this of course can be chosen by the trader or the investor. Okay, so let's look at what are those key price points. Number one, open price, which is the price at the start of the time period. Close price, which is the price at the end of the time period. High price, which is the highest price during that particular time frame chosen by the investor or the trader, and then the low price, okay, the lowest price during that time. Okay, so this is how a typical bearish candle looks like, and this is how a typical bullish candle looks like. Okay, so in a bearish candle, the open price, let's say, well, in this particular example, let's say the price opened at 100. The buyers try to push the price up all the way to 105, but they were met with resistance from the sellers who were very aggressive. They pushed the price down and down all the way up to 85 rupees. And there the buyers again tried to push the price up, but they couldn't overpower the sellers, and the price closed at 90. All right, so this is how a bearish candle looks like. From there, in this particular case, the sellers have won over the buyers within the chosen time frame. It could be 15 minutes, 1 minute, 5 minutes, or even a daily. So this is exactly happens in each and every candlestick. It will tell you a story of four different price points. Okay, excellent. Now let's look at what a bullish candle, what happens in a bullish candle. In a bullish candle, the price opens, let's say, at 90. The sellers try to push the price down all the way down to 85, but they were met with resistance from buyers who came back very aggressively, and they pushed the price all the way up to 105, where they meet the sellers again who try to push the price down, but eventually the buyers overpower them and the price settles at 100 rupees. So that becomes your closing price. So this is how a typical bullish candle looks like. So we are looking at what happens with the price. So in this case, the buyers have won over the sellers. All right, excellent. Usually whatever you see here, that is called as the upper shadow or a wick, right? Like how we have it in our candles, right? So, and this is called as the lower shadow or wick, and this is the actual body of the candle from here to here. Understood? Excellent. So if you have any doubts, kindly rewind the video, pause it. If you have more doubts, please comment in the comment box. I will try my best to reply as quickly as possible. Okay? Excellent. So friends, let's understand again. If it's a red candle, that means sellers are winning and the price might keep going down. Okay? And likewise, if you see a green color candle, that means the buyers are winning and the prices might keep going up, right? Of course, these colors can be altered according to your preference, but usually the red and green candle, red means selling and green means buying. Okay, excellent. So friends, we just saw a typical bearish and a bullish candle, right? So now let's look at a slightly different kind of candlesticks. Okay, see, these look a little different from what we saw earlier in our previous slides, right? I mean, there's hardly any body that we can see here. There's just uh, the price opened and it's ended flat. Here also there's hardly any body there. So is it here and even here. What does it exactly mean, right? Let's look into it. So a small body and a long shadow. See, a small body and a long shadow, right? A long shadow. Same goes here also. It means the buyers and sellers are confused. The market or the price could go either way. So that is exactly what it means. And we also call it as indecisive or no clarity, or there's a lot of confusion. Okay. So whenever you see candles like this, it means neither the buyers nor the sellers are clear about the direction, and they don't want to know which way to take the price. Okay, so the following candle will give us a better clarity. All right, so when you see these kind of candles, it means there is indecisive in the market or in the price. Okay, excellent. And yeah, please remember, we are always referring to price. Whenever we are looking at any candlestick pattern or chart, or even a particular candlestick, we are talking about price. Okay, excellent. So friends, candlestick charts shows the emotions by visually representing the size of price moves with different colors. Okay, so traders use these candlesticks to make trading decisions based on irregularly occurring patterns that help forecast the short-term direction of the price. Clear? Excellent. And some of the key takeaways that we can get from this, whatever we saw in the previous slides, are traders use candlestick charts to determine possible price movements based on past patterns. Okay, and candlesticks are useful when trading as they show four price points. We know which are those: open, close, high and low throughout the period that the trader specifies. Okay, and emotion often dictates trading, which can be read in the candlestick charts. This is very important because the entire markets runs on emotions, human emotions. That's why you keep looking at the patterns repeating time and again. Okay, so traders can customize the colors of the candles like I told you before. Right now, I mean, usually it's red and green, but if you want to change it, it's up to you. Okay, excellent. Come, let's see what happens next. So candlestick patterns are widely used in technical analysis and can be grouped into three different kind of patterns. Okay, so far we saw about candlesticks, candlestick charts. Now we are looking at candlestick patterns, and patterns can be divided into three different kind of patterns. One is single, next one is double, and the third one is triple candlestick patterns. I mean, just to name a few, I've just mentioned a couple of famous candlestick chart patterns. your single, your double and triple candlestick chart patterns. Okay, so don't worry, we will cover all these things. There is a reason behind each and every candlestick pattern here. Say be it single, be it double, or even the triple candlestick pattern. Okay, we will study all these things as we proceed further. Okay, excellent. So with that, friends, we've come to the end of today's module. So if you have any questions, I kindly request you to type your questions in the comment box below, and I will gladly reply as quickly as possible. Okay. So friends, before I let you go, as usual, let us look into what we are going to be learning in our next module. Okay. Exactly. So the power of PE ratio. So from technicals, we are moving to fundamentals again, because this PE ratio will help you learn to spot undervalued stocks. Don't worry, we are going to be mixing both fundamentals and technicals one after the other. So we just saw candlestick, the patterns and the charts and all. So tomorrow in our next session, we'll be learning about PE ratio, and again we will switch back to technicals and again fundamentals. That's how it's going to be. Okay, excellent. So I thank you all for your time. Hope you all have a good day and God bless. Jai Hind.